Happy Friday, everybody. I am here. I am back. Welcome to Finance Friday. We will also post this on our podcast, The Noble Wealth Show, so you wouldn't have to need internet to listen to it. This is going to be a good episode. I'm Amy Novakovich. This is Ryan Wilson.
Hey, everybody.
I've been gone for a few weeks, but now I am back to discuss with you critical financial documents that you might need, why you would need them, what happens if you don't have them, and how often they should be reviewed. Like us on Twitter, or follow us on Twitter, whatever. You know, this social media stuff. Instagram, maybe give me some more inspiration, because I feel like we need to start doing lives on Instagram. Like, share this out. I'm going to share this out right now. Share this out let's share it out.
Everyone take a second.
Everyone take a second and just share it out, because just for fun. Because if we can actually get motivation, I would totally do lives on Instagram, which I feel like people like Instagram more because they can be not known, the name, you don't know necessarily who they are.
Yeah. Well, and I think it can be quicker too. We can just go on
and do 2 minutes,
fire something out there to the world. And
absolutely. So Instagram, follow us on Twitter, check out our YouTube channel. We do little 90-second videos there. Share this video out. But I always like to give a little tip right away, right in the beginning, to give you something of value immediately in case you can't watch the whole video. So I keep getting questions already this morning about tax forms. What tax forms do I need to give my accountant? So you might have a 1099. A 1099 is if you have an investment account, if you made any capital gains, if you had any dividends. This is a form that if you get one, let's just say that, instead of going through all the reasons why you would get a 1099. If you get a 1099 in the mail, you give it to your accountant. A 5498 is if you made any contributions to any retirement plans or anything that gave you a deduction. 5498 actually comes in May. You won't get that now, and you just keep that for your own records. So if you ever got audited, you would need a 5498. Obviously, most people know you need your W-2s. I think that's common knowledge.
Yeah, I would say so.
1099s also if you made income via subcontractor. But those are the main ones as far as what we deal with on the investment side that you would certainly need, that you might not know you need to give to your accountant. So you will need to present that and get going, because even with the government shutdown, they're still processing taxes. Thank goodness. We still need tax revenues. Okay, so what documents? Yes, thank you for all the likes and the hearts, guys. Hey, Johnny, thank you. I am happy to be back. Hey, my Florida dad. So we will start by just listing some of the documents that you might need, and then how often they should be reviewed. Do you want to start with one?
Yeah, let's start with, let's do estate planning.
Ooh, fun.
Yeah.
Okay, estate planning.
So sophisticated.
I know. I'm just excited to be here.
Yeah, it's been. So yeah, no, it's good to have you back.
I know. I don't have the personality of Jim. I don't even know if he's watching. Is he even watching?
I don't think so.
Anyway, hi Jim. But okay, estate planning. So you might have a will. You might have a trust. You certainly need a will. I feel like, especially you just got married. I feel like especially once you get married, you really need a will for all the things that you want to know that they go somewhere that you approve of. A trust is more, and we've had a estate planning attorney on in the past, my beloved friend, Ed Woolman. We've had him on in the past to talk about why you would need a trust, not to just avoid probate, by the way, but just to direct where your money should go. A trust should be reviewed, I would say, every 3 years. Would you agree? What would you say?
Yeah, I would say every 3 years if something major hasn't changed. Right. I think that if you have a trust and you've had grandchildren, people that you want to add, if you have new properties that you need to put into the trust, things like that need to be reviewed more often if there's major life changes that have happened. And that'll kind of be a theme throughout all of these documents, is major changes in life.
You gain any more assets, you inherit money, you get a divorce, you have a death in the family. I mean, I can think of a whole bunch of life events that you might go through that you would need to actually go and update your wills and your trusts. Now, there's this whole online system, right? I can't think of LegalZoom, and we're not affiliated with LegalZoom, but the only one that I can think of that comes to my mind right now, but there's a whole bunch of those online platforms that would allow you to get your estate planning documents online. Now, just remember, those aren't really going to give you personalized advice. So just remember, we did a Finance Friday, if you missed it, on what is appropriate to search on the internet for financial information and what is not. This is one that if you're just doing a basic will, I think that's okay to really do on LegalZoom. Don't do a trust. You need an estate planning attorney to give you personalized advice.
Someone that knows you
and your family
and what your intent is. Because I think a lot of times when you have attorneys can take what the intent is and then put things into place. Whereas if you just go online, they don't know what the intent is. They might ask you for certain things and they'll put it where they think it needs to go. But I think intent is a lot of where, who gets what. How
and not only that, but just advice. Like I'll give you an example. So I just had some friends that I took with an estate planning attorney, and they just don't even know what to ask. So they have a blended family. They have, children that they want the money to be structured a certain way. So instead of the children just getting a lump sum, they didn't even know that they could say, oh, well, my child can get this at 35 and then get income payments. You can structure it very specifically in a trust that you really can't do in a will. So that is the difference between a trust and a will, is you can get super specific. So a trust really helps, guys, if you go to an estate planning attorney to get a trust. Down here in Florida, it's anywhere from $2,500 to $4,500, depending on the trust documents. Hey, Courtney. Hey, guys. Thanks for joining. Check us out. We're talking about the documents that you might need, why you would need them, and then how often they should be reviewed, and also what happens if you don't have them. So let's think of an example real quick. If you don't have a trust and you just had the will, I guess, so that's the example that I just gave. Yeah. Like if you have an adult child that you didn't want to inherit a lump sum.
Like if you want to structure, if you have
any type of assets. I'm just thinking any type of assets. So even real estate, or let's say you wanted to split your real estate among your 4 kids. And the way that it says in your will is that it goes to one of your children, because at the time, maybe that was the only child you had and you didn't update anything afterwards. So this is why a trust is definitely vital and should be reviewed anytime you have a life event, or the trust should be reviewed every 3 years. Same thing with the will.
Yeah.
Okay, next.
Let's do your financial plan.
Oh, good. Why don't you talk about that?
Yeah, so I think that financial plans should be looked at once a year minimum. And then if any major life changes happen, maybe sooner, you could
not even major life changes, like you change a job.
Change a job,
your
income
plan
changes.
Yes, your income. What? I said hi to you on the live because you weren't joining. I said, I know I don't have the personality of Jim. Jim just walked in.
Yeah.
I was on a phone call.
Oh, okay. Thanks.
Good to see you. So yeah, I think anything changes, whether it's changing, I guess buying a house would be pretty major.
Or buying any assets, like let's say you buy a boat.
Yeah.
Or you buy a strip mall, or you buy a business, or anything. I would even argue that your financial plan, this is kind of what we do, is ongoing, like every quarter, or at least like twice a year, just kind of every time hi, Mercy. Anytime we really visit investments, which we'll get to in a second, and retirement planning we'll also get to in a second, but we try to at least just cover or ask some general questions about the financial plan. But you should have your financial plan, which it doesn't have to be super complicated. It doesn't have to be this big, pretty, giant document that you paid thousands of dollars for. I'm just saying any general financial plan you should try to go over. 3 months goes by really fast. Semi-annually would be more than appropriate, I would think.
Yeah.
Now, investment documents.
Yeah, those should be, I think, looked at quarterly.
Yeah, for sure. You'll get monthly statements.
But I think a big thing is knowing, if you have investments that
people don't want to look at their investment statements.
No, but
like anybody out there, well, besides Ed, if he's
I think.
Do you look at your investment statements? Like seriously, like how often do you look at your investment statements? Because
I know a lot of people that say they don't, and especially which is we're going to talk about differently, but like retirement, they just don't even look at it because they don't want to think about it. It just kind of goes.
Right. Retirement is different from your investment statements, though.
Right, but I'm saying that's the same attitude towards them. Is that like, if they're being invested with somebody, they just don't really want to look at it as often as maybe they should.
Hi, Mom. I don't think she's ever joined one of these. Somebody help you get on? That's good. Hi, Mother.
But yeah, I think that you should. I think you should know what you're investing in.
For sure.
Know what you own is kind of
which we have many different podcasts and Finance Fridays on types of investments and what you might be invested in. But the reason why we say, and let me explain that real quick, because maybe you're going, why is investment statements different from retirement statements? Retirement statements might be like your company 401k, or if you just have an IRA that you're contributing to. SEP IRA, 401k, 403b, 457, all these, you would know them if you had them, I think, with your current company. If you're not sure, call your HR department and find out what you have. But those are your retirement documents. Those are your retirement statements. Those don't need to be reviewed as often because a lot of times your choices are limited in those types of plans, so you wouldn't constantly adjust them and review them. I would even say some people have annuities that are for retirement, and so you wouldn't necessarily review that annuity all the time in the investment statements, but yet your investment account is a liquid account that you have somebody managing that's invested that you could pull the money out if you needed it. Like, let's say you wanted a down payment for a house and you pull the money out of your investment account for that down payment and you can always put it back in. It's not taxed like retirement money, so there's no penalties to pull it out. So it's just much more different. It's much more liquid. It's much more shorter term. Retirement might be 30, 40 years. The investment account might be 5 to 10 years, might be 1 year. So the investment accounts are just different from your retirement accounts. Okay, so we've covered estate planning documents, wills and trusts, every 3 years or life event. Investments, we just said, financial plan. Financial plan, talked about investments. Now I would want to move on to life insurance. Yep.
Sure.
Go ahead.
Yeah, so I think life insurance should be looked at every 2 to 3 years, I would say, if you haven't looked at it. And with, some people will say every year. Again, I
think that's a little excessive.
It probably is, if you kind of are familiar with it, but
especially if you have a term policy.
Right, but
that would be part of your financial plan.
Right. So if you're keeping up with your financial plan, though, that's pretty much annually, then it would kind of fall into that. Right. So it's just more making sure that it still fits what you need. So you want it whenever, again, something changes. If you buy a house and now you have to have more insurability,
you have more kids.
Those things. If your expenses change and your life is worth more, then you should probably have more insurance.
How do you define your life?
Well, I think that if you were taken out of the equation, right, and
that's fair.
How does your family? How does
your financial worth? Not your life's worth.
You're right. I'm talking in a dollar amount. No, everyone's priceless. No one's family can replace them, but you can be replaced financially. at least for a time.
What's the cost of replacing you financially?
Right. Yeah, for X amount of time. Some people like to go all the way out to the end of a mortgage or payment of a car or kids college or whatever. That's your decision and how your family structures that.
Right.
But what is that worth? And so whenever that changes, if you add a child, that's going to be a higher expense. That if you were, and depending on how your family income is set up, if husband and wife make equal amount,
if you're the breadwinner,
you're going to need more insurance than maybe somebody that's making less in the family.
Right. All things that need to be reviewed. So anything, life insurance, I would even throw disability insurance in there. If you don't have disability insurance and you're wondering, do I need disability insurance? I guess Ryan just actually made a really good point, is if you were to become disabled, what's your family going to come up with financially to replace that income that you were making? Your financial worth. Not your life's worth. Your financial worth. Like if you became disabled, what would your family have to come up with to replace you? And if the answer is, well, not much, then you probably don't need disability insurance. If you are the breadwinner or you take care of the family or your family would be devastated without your income, then I would consider disability insurance, especially if you're younger. It's actually pretty cheap. It's not super expensive. So I would just look into it.
Yeah.
Something we can help with.
So every couple of years, taking a look at it, making sure that it just fits your life. And and then kind of just keeping these markers like, I had a kid, maybe I should look into it. So if those things happen, maybe checking more than every couple of years.
But it's only happened once, but something that's out of your control is actually the mortality tables change. So as people are living longer, they can now run insurance quotes through up to age 120, whereas in the past, they would just run them through age 100. So now, technically, in the last 10 years, maybe even 15 years, if you have a policy before 10 or 15 years ago, you might actually still be on the old mortality tables. So you're spreading the same life insurance cost over 20 more years. Now, if you've had health conditions or you're a lot older, it might still be cheaper just to keep your old policy. But something that would spark, oh, I need to review it because, yes, I have an old policy and mortality tables have changed. So just something else to think about.
And something also that I was thinking about that kind of sounds like a no-brainer, but if you have been divorced, changing your beneficiaries.
Oh my gosh, it seems like a no-brainer, but
it does, but it doesn't always happen, and you know,
this is why
it's
you
just
review
something you want to take care of. Yeah, always keep an eye on that. So things like that definitely are going to trigger needing to be reviewed.
For sure. Okay, so we talked trust and wills, financial plan, investment statements, retirement statements, life insurance. Your financials for your business. So if you are a business owner, the easiest way to prevent fraud is to review your financials, especially if somebody else is doing your financials for you. This is like the #1 way to avoid fraud in your financials is just to take a look. Seriously, it would take you a half an hour. If you don't know how to read financials, reach out to us. We can definitely help you. Maybe we should do a Finance Friday on that. Seems like it'd be pretty boring though.
Yeah.
How to read financials.
Yeah, I don't know if we haven't watched it.
Maybe some cold day in Florida. I don't know. But anyway.
Let us know.
Let us know because this is part of business planning. I'm telling you, you would prevent fraud if you would just go over your own financials, just a half hour, a quarter, seriously, just looking over. And by financials, I mean income statement, balance sheet, cash flow, bank accounts, things like that. Just things like that, just taking a quick overview look of your financials will prevent fraud in business. And I say quarterly. I guess you could do it monthly. That'd be pretty intense. But quarterly should catch it. Not for nothing, but if your employees know that you check your financials, that alone will prevent fraud.
Yeah.
So just reviewing your financials of your business. I feel like that is a no-brainer, but it's not. A lot of people do hire somebody to do their financials and then never check them.
And they just assume everything's good.
Right. And I don't want to instill like, oh, don't be trusting. But it's just, I think
it's like putting a security camera up there. Things are less likely to happen if you put one up.
That's true. I guess it's just being a responsible business owner. I'm trying to give you good practice.
But if you aren't
to be negative on the person who does your books.
No, but if you're anti, keeping fraud from happening, if that's your lead, then it's the same type of thing.
True. Very true. Okay. So the last one would be property and casualty, which we probably should have started with this one because this one applies to everybody.
Yeah.
In hindsight.
Yeah.
So I can put it in the comments. This is when 17:59 or 18 minutes. You want to talk about that for a second?
Yeah, and I think this also can kind of fit with all of them. But I think property and casualty for sure needs to be reviewed when it's renewed.
Which is like car insurance.
Yeah, so car insurance, homeowners, umbrella, if you have a boat, all of those. Jewelry, renters, all of those fit under that property and casualty. When they renew, you probably want to review it, and usually they'll send out your new deck pages or declaration pages about a month or two before the new cycle it renews.
By the way, make sure you have a declaration page and not just a certificate of insurance. This happens. We see this happen on the athlete side of things, but they'll get into fraudulent things and they get a certificate of insurance, which is not real. You have to have a declarations, and I shouldn't say is not real. It's not always real. Yeah. The declarations page is really what gives you the proof that you have insurance. So review the declarations page, which shows you all your coverages and your deductibles and all this fun stuff. I'd review that, like when it renews.
And it doesn't have to be super complicated, but it can be as easy as asking, do I qualify for any new discounts? Yeah. If you have a house and you've gotten a new roof, if you have upgraded and your house is worth more, then you might want to say, hey, am I covered?
Oh my gosh,
if my house is worth $300 now and I pay, I'm only insured for $200, you probably want to review and see, okay, well, I need to add so that I'm covered. I'm covered if something happens.
Right.
So things like that. If you do upgrade, you can ask if you get, like I said, discounts. What else?
Not only that, but so this just happened with me. Mm-hmm. I don't know why I assumed this, but I did just assume that I had rental car coverage. So cheap, super cheap. And then I got into just a little fender bender. Somebody backed into me. It was like no big deal. It was like $3,000 worth of damage. And ended up not having my car for 31 days. 31 days just because something electronic or electronic? Yeah. Was hit. I don't know a lot about cars. Electronic was hit in the car accident. I didn't have rental car coverage. And thank goodness, because it wasn't my fault, I actually got it all reimbursed. But it was almost $1,100 in rental car expenses. So just little things like this. Like if you have an agent, if you have somebody you trust, review your car insurance, like little things like this that you can get. And if you don't understand, ask somebody, ask a professional, ask us if you don't have a property and casualty person. We'll get you with somebody.
Yeah.
Little things like this can save you thousands.
You should probably find someone new.
Well, that's true. Or if you're questioning.
Yeah. So
well, if you're questioning, you should at least give them the shot of answering the questions.
Yeah. But knowing what your coverages are, going over that, reviewing it.
Check your deductibles. Like maybe you originally put a high deductible to get a lower rate and then you forget about it. And then you get in a place where you lose your job and you're like, oh my gosh, I have this giant high deductible. Go in and change it because it's not as expensive to just change it versus paying a $5,000 deductible or a $1,000.
And another one is age. You review it. So once, if you're younger, once you turn 25, usually you get lower rate. So if you have a higher deductible for a lower rate, but then you get a little bit older, and so you're a more seasoned driver.
When I turn 25, I'll ask you.
Yeah, exactly. Couple more years, and but I just hit that a few years ago, and so I got to lower my deductible and still keep my insurance around the same. Cool. And so those are things that you want to review and just ask the questions. Luckily, I trust my insurance agent really well. And
this sounds like such boring stuff, like, oh, review this, review that. But it is so important. Like, just if you care about money and you care about your future and you care about your family, I just suggest that I mean, I know we talk a lot. Like, this is like a 22-minute thing of like which documents to have. Somehow this always goes longer than expected. I was like, we should fly through this.
Yeah, 10, 15 minutes.
But like Ryan said, if you have a person you can trust, it takes no time to just ask a few questions, review it every time it renews. It's not a big deal. Haha, he's laughing. And estate planning documents, like you can do this with your financial advisor, hopefully. I mean, I know we review estate planning documents and tax returns and things like that all in the financial plan. So it doesn't have to be like 7 different pieces. If you have one person that you trust and you work with, they can help you review all the documents that we talked about. So let's just review real quick. So in the very beginning, I gave the tip on what tax forms you're going to need for those of you that just joined. On the investment side, that you're going to need 1099s, 5498s. Obviously, you'll need things like your W-2s, your income right there. But as far as investment statements, 1099s are the big one that people miss, that people don't realize that they need. It's a 1099. You will need that from your investment accounts. Trust and wills every 3 years or every big life event. Investment statements, definitely more often than retirement accounts, because retirement accounts are way longer term and you might be limited as to what you can invest in your retirement accounts. So it doesn't need to be reviewed as often. Your financials for your business, oh my goodness, so important to avoid fraud. Life insurance we talked about, and property and casualty insurance. Anything else you want to add?
I think that's it. I think that was good.
If you guys have any questions, reach out to us, novawealthmanagement.com, or obviously just reach out to us on Facebook. That's fine too. Have an awesome weekend. Enjoy if you're in Florida, enjoy our cooler weather.
Yeah. Thanks, everybody.
I can't see over this giant mic that we have. Bye, guys.
See ya. Have a good weekend.